Hello. It's obviously been a long time, but let's get straight into it. Obviously, week 8, chapter 8. Okay. It's chapter 8 now. Let's jump right in. So, we're going to be going over this. I believe it's AU, I'm pretty sure. We're going to be obviously going over the Litiverse stuff. So, it's the first step, as always. We have... there we go. We have our H1 identification. It assists with obviously understanding which inducement you're trading away from, where your major levels, obviously your points of interest and your stuff like this. So the chart beforehand was obviously H1. So just looking at this, we can obviously see a couple of things. We can see, okay, yeah. Okay, we see all of this, but let's go into the next slide and we can dig into that a little bit more. So what do we have? Just based on the H1, we have this juicy, boom, 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 and then obviously we'll be doing this day here. So, okay, we understand what's going on. Yeah, looks pretty good to me. We've got 1, 2, 3, 4, 5, 6 touches of this support or equal lows or whatever you call it. But let's go through this. So, first off, we build this trend to the upside. We bring in all these buyers, break out. They're all getting excited. Break out. Then what? Okay, we start to build this overall resistance zone. Push price lower. What does this do? This is the point where they get it. And they're getting excited. Oh my god, vectors. Getting really excited. We take out some of these guys, and then we have our next little push higher, taking out all of the SLs from up here, all of them. So these guys are out. They all thought like, oh yeah, we're selling. That's our premature sellers. The buyers have been brought in throughout this push. Some of them got taken out here, but obviously some of them are still in. And then we have this final push high. So now all the buyers are convinced, okay, we're going up. There's nothing stopping us. Let's get it. The sellers have already been taken out, our premature sellers. So perfect. Everything is looking very nice. Vectors, as we like to see. Then we follow price down. Okay, perfect. We have obviously to push lower. Takes this liquidity, which is why we trade away. But obviously, once we begin to trade away, we understand, okay, this is still pretty equal lowy. We've now got like an overall support level here. So this could potentially become the target. Then we pull back to where? Here. And then we went one final push lower. So at this point, you've got to think, everyone's thinking, okay, lower. We want price to go lower. We're following the momentum. We're following the breaks of structure. Price is now going to go lower. So what do? Well, first, we build this little mini buy trend, getting people excited. Wow, this looks pretty familiar. We've had something like this over here. And then obviously we pull back to this. Now, why is this pullback to this level important, because what happens when we make that new low? Now, this is the confirmation for the sellers. So some of the buyers, they're obviously in up here. Sellers push in. You know, you've got your breakout traders getting in. You've got your break and retest traders getting in. You've got your overall resistance traders getting in. They're all getting excited. So they're like, okay, makes a lot of sense. They're jumping in. Where are their SLs? Right above the reaction. So similar to what happened up here, false break structure, push to the downside, and then what? We know that we've got some people selling here, and in the ideal scenario, we take them out. So that's exactly what happens. Pulls back, takes them out. Now, we've had very similar situation to up here. We've had our premature sellers being taken out. We've got a very obvious target. So, from there, what should ideally happen? Boom. Okay, so that makes a lot of sense. We can understand that. Higher time frame's pretty clean. We can understand that overall, the higher time frame is definitely telling us to sell. Perfect. So let's jump into the intraday. We obviously start, let me get rid of that for you. Sorry. We obviously start off with M5 Asia range identification. Here we want to identify more precise areas of liquidity, build-ups and potential liquidity runs. So let's have a little look. These are a couple of things that it could look like. We've obviously seen this. We're used to this by now in chapter 8. Seen this probably thousands of times. Okay, again, perfect. Let's get to the charts. So, just coming off of the intraday. Now, first, sorry, let me just go back to a higher time frame. Just bear with me. So here we understand that, okay, higher time frame. We're wanting to sell. Perfect. But just because you're wanting to sell on the higher time frame doesn't necessarily mean that intraday is going to dictate the same thing. So we want to also align our higher time frame with intraday. So let's look at what intraday is telling us. So first off, okay, beautiful. That's not the best line. Forgive me. No, we can draw better than that. Boom. Okay, perfect. So people getting interested. Lovely little build up into inducement low. Here you've obviously got breakout jumping in here, breakout and break and retest jumping in there, breakout and break and retest jumping in there. So, okay, we get the idea. Lots of buyers. Perfect. And then what do we see? Okay, so even on intraday, we've built these equal lows. We're trading away. We know that they're all in once they get that structure confirmation. And then same thing again. What do we have here? Breakout getting interested, breakout and break and retest getting interested. So perfect. Now let's zoom out a little bit and try and understand. So here, this obviously lies on equal lows. And then we've got two zones above it, which are all possible. Nothing to take limits off, of course, because you're not just going to randomly set your limit here and be like, oh yeah, of course, that makes loads of sense. You want your confirmations. And even then with your confirmations, you probably don't trade limit off this zone or this zone. You would want to trade the reaction after your confirmations. So let's have a little look. Okay, cycle identification for breakout of Asia. Have we had the inducement of the day? And what structural points were taken out after Asia has been induced? Lots of questions. We're going to give you the answers. So Obviously, before that, we could potentially trade a Frankfurt setup. Ideally, obviously, the nicest setup is always your fast and Frank Furious into the inducement of Asia. Gives you a nice quick trade, nice buffer for the day. Some money to play with so that you can get into these more riskier setups if you so choose. So, okay. Perfect. Let's have a little look. So, again, we understand all of this. We understand where people are getting in. We understand where the SLs are. So let's just apply this for a second and let's think. So that's our first breakout point. Agree. Majority of the SL is going to be down there at Asia low, as that's the significant structure point. Then push, pullback, push, boom. Okay. So who got in here? Well, obviously you've got breakout plus break and retest. They got in on the breakout of this high. Retest, push higher. Perfect. Makes lots of sense. So we understand that, okay, this zone here has lots of SLs there. It's the first real structural point after we've had our channel induce high. So very likely this is going to be an SMT. In the ideal scenario, what happens with this SMT? Ideally, we get like a really nice, like, boom, boom, really sells it so that people even set their limits there. And then we just, boom, right at Frankfurt. That would be the ideal scenario. So let's have a little look. Yep, remember, breakout plus break and resistance, break and retest. SLs are right here. This is week 1 content. No reason to overcomplicate it. This is exactly what we teach in week 1. There's a reason why we tell you to focus on those 4 liquidity types. So let's have a look. Okay, wow, this is getting even nicer. So now we've got people jumping into the sells. Again, if we're going to get our reversal set up in London, we always want to bring, not always, but ideal scenario is to bring in premature sellers before the true sell happens. Now, loads of premature sellers will be brought in if this low gets taken. That's the obviously confirmation for the breakout. Trend line guys, they're all getting excited. So, okay, this looks really nice. Is this a straight limit? Probably not. Probably not. Depends. What would be the ideal scenario to fuck over everyone right here? Well, we should understand this from a mile away. And I don't remember exactly what content this is. I think it's chapter 3 or 4. I think 3. This is obviously an additional confluence for this zone. It's day open. So, what a surprise. It's not quite Frankfurt yet. So let's say no trade. Let's just stick to timing. But we understand, just in terms of price action, what should happen from here. We understand, okay, this makes a lot of sense. I understand what could happen from here. At this point here, everyone's getting excited. Sells, breakout, trend line. They're all getting really excited. So what's next on the Litiverse? Frankfurt Open, our fast and Frank Curious. 1 second, let me just have a sip of water. Identify whether Frankfurt itself was the inducement out of Asia, or whether we are in the middle of Asia during this time for a fast and Frank Curious, which could lead to a retail heaven. Okay? So, Frankfurt Open. Realistically, we're not dealing with Frankfurt Open. We're probably dealing with the fast and Frank Curious if we just look at the price action. If it was a Frankfurt Open trade, we'd probably be getting something like that. So we understand, okay, quite likely that we're going to be dealing with a fast and Frank Curious setup. Perfect. Now, we obviously don't have the midline, but we do have the day open confluence. So let's keep going. Okay, yep, we understand. Don't rush. Target identification. Well, if we're going to be trading our fast and frank curious, so if price was to maybe come back to here, give us the mitigation, we would obviously just be taking it to Asia high. Bring our nice little, bear with me, bring our nice buffer for the day, and yeah, we can start to maybe take some more riskier setups. So as you can see, Frankfurt just misses our mitigation. That's fine. Overall, intentions are obviously very clear. Sellers brought in, buyers taken. So we understand that is obviously our ideal scenario. Okay. Right. So now we have an inducement of Asia high. But just because we've taken this, we still need to use our brain. We're channeling upwards. We haven't broken out of the channel yet. We're bringing in buyers. And what is right round the corner? If this right here was Frankfurt, what do we have right round the corner? Of course, we have London Open. So, London Open Cup trade. Have we identified the type of movement out of Asia? We obviously have not had our vectors yet. And let's keep going. Sorry. High time frame POI. Look to the left. In this case, I don't believe we have a nice higher time frame POI. I'll go back and double check, but I'm pretty sure we don't. So, okay. If we were to, then obviously you get your refined mitigation. Maybe this is your extreme limit. Maybe not. Depends on how nice the price action going into it is and how nice this zone is. Is it an inducement POI? Is it not? Should you maybe play the reaction from this zone after proper confirmations? These are all obviously things you need to think about. So, okay. Again, I think we speak about this quite a lot, but you want to be careful over refining. Quite often, you just get it going from the M5. But if you do over refine, you have to accept, if you do want to always refine to the M1, nothing inherently wrong with it. You just have to accept that what might happen is you might miss some trades. So you're obviously missing some trades, sacrificing, but you're not but if you're going for the M5, you're obviously maybe sacrificing a little bit of RR if it goes to the M1. 1 second, auto break. All right, perfect. So in this scenario, we could have a possible extreme limit entry, like we spoke about. If we get a nice little build up underneath it, right into inducement mitigation at London Open, that would be like obviously your ideal extreme limit entry. Let's keep going. And then you can set your limits and relax. Realistically, in this scenario, you get your build up, inducement low, London Open. Now it does vector up, but realistically, probably not a limit that you're going to take. So there's nothing wrong with that. We don't need to suddenly start rushing. We understand. Okay, we've brought in sellers here. Trendline guys, they're all excited. We've taken out some buyers, and now we've obviously got Asia high. Breakout buyers getting in, pullback. Another set of breakout buyers getting in. So we can see, okay, people are getting excited for the buyers, especially London Open kicks in and we just have boom. That's obviously your vector candles, people who trade momentum and use that as a confluence, getting people in via FOMO, all types of different things that this induces. So let's see. Mona Lisa trade identification. At this point, we should be presented with trade opportunities that form in the extreme mitigation, your LET, your breaker structure, or your EDM. So you should all know what they are by now. So let's keep going. LET mitigation. Yeah, we should understand all of this. Let's get into the meaty stuff. So, boom. London Open. Cycle completed to the top side. Probably not a limit. Maybe if you take the Frankfurt trade up into it, you can risk some of the profits on that limit. Maybe it's still a risky trade, but we can put like we'll do this. We'll do like a little half tick. There you go. Okay, we understand buyers are in. We've also got these equal lows here. So we understand that all of the equal low buyers that got in, as it's going higher, some of them waited for the structural confirmation. They still have their SLs here. We also know that on the higher time frame, we've got even more SLs down here somewhere. Don't know exactly where. From the higher time frame, like I don't even know what it was, like quadruple bottom, I guess. And then we understand, okay, it's London Open. We had our vectors to the high side. We gave up break of structure. We already had the fake break of structure here. This induced all of the premature sellers in with the SLs here. We took them out. We sort of built these like equal highs, gave a nice little reaction away, and now boom. Now we've obviously just had the relevant break of structure if you choose to trade such. And now we have the trades. So here, what you need to think about is, let's go back here. Has London Open completed its purpose? Well, we understand that if we really look at it, this is probably the minimum purpose for London Open. This inducement high should probably at least take it down to here. We built buys, brought in the fake sellers here. Not fake, they're real sellers, but obviously brought in the premature sellers there. Nice little reaction away, London Open, boom. Okay, so we understand that realistically for we probably don't expect it to induce a high one more time. We probably expect, in an ideal scenario, some kind of mitigation. Okay, so we understand that. First, identify our time, as well as what our prior move looks like. Is this a continuation or an additional inducement in So obviously in this scenario, it is most likely going to be just an additional continuation in Magic Manipulation Minutes 1. Let's keep going. Okay, if you're looking for LO cells from an AOI and awaiting a lower time frame confirmation. Oh, that's obviously the momentum mitigation. So I don't think we haven't come into demand. Let's double check. No, so we haven't come into demand or anything like that. So no reason to be additionally careful. Even if we did, this would still be a very nice trade. And this is obviously the scenario that we're going to be looking to play. Looks pretty much exactly like what we had happen. Again, you just move this to the left a little bit. We obviously had our fake break of structure here, and one little push, pull back, push, and then that's obviously where we are now. So let's keep going. Obviously, we don't expect this because London Open came in, beautiful cycle completion to the high side, makes perfect sense. So we spoke about the London Open target, so that should all make a lot of sense. Now, the only step left is to find target areas for the London Open and trades. The move from London Open will tell you how strong the rest of the continuation will be, so choose wisely. Remember the higher time frame POI we looked at in the previous steps. Obviously, we did not have one. And now we need to think about areas that it can pull back from, because it's very rare that you expect just a straight up. Okay, let me draw this out because this is going to look like a little bit weird, but boom, 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 boom. And then you very rarely expect just like that right to your higher time frame target. Obviously there's going to be, we probably expect like a little bit of a pullback there, or maybe there's another like liquidity zone here and we expect like a little bit of a pullback into that, or maybe like that, and then we come into this liquidity zone and we actually expect like, okay, we fake out the buyers, stuff like this, and then our final liquidity zone, and then maybe then we go to a little build up, inducement low, boom. Anyway, but if you obviously look for and anticipate reversal areas or retracement areas, then you're not going to be so shocked when they inevitably happen. So let's keep going. Let's go through this. Okay. So perfect. Happens a little bit before MM1. This is going to be like 9:20. 9:20 UK time, so 10:20 German time. But this is obviously Mona Lisa setup. Wow, love it. Then we need to think about where our overall target would be. Minimum is going to be here, but when we remember the higher time frame, potentially it's going to be here, or wherever the higher time frame is. Maybe it's down here, but we need to think about that because we know that it's very close. That's your minimum target. Perfect. Pullback into continuation. Order flow down. These are some nice trades. You know, if you miss this one, there's nothing stopping you from taking that one. Makes sense. We like this. We like this. Where would the ideal pullback for MM2 come from? So we're probably about an hour or so away from MM2. Ideally, we expect some type of pullback. Now, let's think about what is the ideal way to bring in more buyers. Well, ideally, if we reacted from like this SMT, which is also kind of a liquidity point in and of itself, it would make a lot of sense. You know, you pull back, boom, and then maybe MM2 gives you the EDM into like a continuation. Yeah, that would be obviously our ideal scenario. So let's have a little look. Okay, shit happens, just misses. Obviously this price action, boom, comes up, fakes the break of structure high, would be like the ideal scenario. But anyway, it's MM2. Let's jump in and see what we see. So again, we faked the break of structure. This was obviously our let on the M1. It's not the nicest. Here, we obviously have our MM2 trade, which fakes the break of structure. Boom. Into our EDM. Into our continuation lower. Okay, perfect. Yeah, that makes good sense. I understand that. Love to see that. So now we need to be careful because now we have grabbed some liquidity. Overall, we understand, yes, our minimum target is down here, but we still can potentially expect some type of a pullback. Maybe we pull back even higher and we take out this position, right? So if it pulls back to here, realistically, you're probably not going to want like a third entry, especially after we've grabbed this liquidity. Sorry, fourth entry, especially not after we've grabbed this liquidity. So what do we understand? Okay, at this point here, showing the vectors, yeah, it's probably best to break even. That makes sense to me. Perfect. So now I'm pretty sure this was news or something like that. So now is the perfect time to remember our H1 higher time frame coming into New York trap, because obviously the ideal scenario for our daily cycle would be it continues, New York trap induces low, we get like a pullback trade to end the day, and we end the day like within the overall range. That would obviously be the ideal scenario. So remember back to this, all this stuff that we showed makes a lot of sense. So that is this line here is this line here. Okay, perfect. So what's next? Daily cycle identification. Where are we in terms of the bigger picture of the day's movement? Has the day itself been a build-up, inducement, or mitigation on the higher time frames? Well, if we look at this, boom, we come back. So basically we've had this type of price action, boom, and now we're currently here. So we have two scenarios. It could either be LO KO, or we could get the starter kit. Obviously, ideally, if we take this inducement, depending on the timing, we would obviously ideally prefer the starter kit with a nice little pullback back into the overall range. Be very nice. So let's keep going. Okay, yep, this is obviously like pretty much exactly what we're looking for. Again, I mean, it looked pretty much exactly like this.
All right, so we had this beautiful day here, fought back on this one. Now we just continuing the overall plays. And what do we have? So we're back, obviously, with this cycles in here, right? So what we see, technically this gives the mitigation. in here overall should form the equal lows, because again, we want to trade away from the major inducement mitigation. All right, so we have this baby inducement in here. So that could also be equal lows for the long run, as again, at some point we want to induce lower to go higher, right? So that's all possibilities we have to keep in mind, right? So technically, we just wait what this day brings or what this day already brought to see if you want to trade away already into the high side, or if you want to trade low first and then maybe aim for mitigations in these areas, right? And then go higher. That's obviously what we see once this cycle is done, but we obviously can have both, right? We can have normal, perfect London knockout scenarios. We can have like retail heavens technically, right? Or we can have like a normal cycle play and then into mitigation, and then obviously continue the days on the next day as well, right? So let's see what the day brings or what the day brought in terms of cycles, what we have already. So the only thing we had is obviously this build up in here, this low to go higher, and then not too nice in here. So again, it's more like a veg thing. We don't really want to trade those too much. Again, kind of induced to the high side, builds the equal lows in here, right? So if it comes back in here, that's also like a cycle in Asia, as you want to trade away into the liquidity, kind of induce the build up high. Not the nicest, so I would personally stay away, but that at least gives us direction for Asia. Yes, it does. Okay, this is your potential again, let's just stay out of that shit. But technically, yeah, your potential re-entry in here, that should not take out this high, but now just creates liquidity though. Okay, perfect. Then obviously we have the equal lows again and taken out. Okay, so this is kind of your Asia scenario. Not really anything I would be too fussed about. So if anything, let's check again the 1 hour or the MAP50 maybe. So, okay, so we have just this cycle plays in here. Not really too much going on, I would say. So if you go lower, liquidity would be obviously the goal. I would be very careful with this mitigation point in here, as this is, in my opinion, just so obvious, a little bit too obvious, right? So let's actually see in the 5. Again, obvious mitigation zones are never too good, to be fair. So this is more like a smart money trap, and if anything, I would aim for this mitigation here, because this is kind of a liquidity grab. This is just, again, in the mess, kind of waits until it gets induced, and again, it can be equal lows in here, right? And this obviously is not really proper mitigation. It would be a mitigation point if it hits in here, but for the bigger picture, obviously you want to take the proper supply and demand, as this is also the inducement low, right? So this is better, in my opinion. And then we have the perfect lit cycle anyways. We have smart money trap into proper mitigation. That's what we look for anyways. All right, so let's just stay in the M5 in here and fast forward it through to see what the day brought in here. All right, so first of all, we come in with our fast and fluctuous trade, builds the equal lows, comes back, obviously, into mitigation. Right, so let's see the M1. Oh, I said less than M5. Okay, that technically is your short trade for obviously liquidity plays into liquidity. That's what I mean, right? So, I mean, you could aim for next liquidity target, which technically is in here, right? Or, yeah, not all actually, or mitigation maybe. I don't know about that though. Right, so that's possibilities. I don't like the cycle rate though, so I would more like aim for like this 1 to 6 for Frankfurt. Not too bad. If it takes out the liquidity, it takes it out, even nicer. Okay, but yeah, what do we have in these scenarios already? build up like this, right? So we already see, okay, this build up is not induced in any direction. So if induced slow, even nicer. If it is kind of in this smart money trap zone, we can, same exact thing, expect a reaction high to go lower, or maybe it takes it already, but it's still in a build up. Okay, let's mark it up properly. Oops, that's the wick. Sorry for that one. Okay. So yeah, London comes in. London can give the reaction. And it does induce the build up to the high side, right? So same thing. If induce the build up to the high side, technically this would be a proper potential mitigation zone. But also we have Asia midline. I just have to check out of curiosity if you have Asia low. Not really the nicest POI. Everything is mitigated, so wasn't worth a look. But if you want to trade it, obviously this is your Asia low scenario. Obviously you want to aim for the liquidity, right? And then let's see. Okay, didn't take it out, and now we have magic manipulation minutes, so danger. Okay. So now that's a very interesting one. So because you're building the equal lows in here, so I doubt that this is gonna hold. So we mark this as a smart money trap in here. Induce high to go lower. What's the next inducement zone we would have? Obviously above here. No, actually, we even can aim properly here. I mean, this obviously is the obvious relevant break of structure zone. Liquidity target is here. Sorry if I'm getting confused here. Asia midline would be nice. There's not really something going on though in terms of mitigations. So if anything, we have only this big supply demand area in here. Like this candle in here. Not really anything for mitigations other than that. So, okay, but this at least would make sense in terms of inducing liquidity to the high side and then go lower, takes out the equal lows. Okay, takes out the smart money trap in here. Okay, induces the build up to the low side. Right, not the nicest. Not really the nicest one. So maybe just mark it up like this. Induce low to go higher. Right. And if you want to build a channel here, it has to kind of look like that, but then this has to be adjusted also. Let's see if we can make a high build up in here, which would be nicer. Maybe you get an inducement high into the mitigation. Okay. Yeah, I mean, not the biggest fan of that one. I like this one better, to induce low to go higher. But yeah, if you saw this some sort of a build up high side as well, obviously now there's no argue. Whack the candles into liquidity target into Asia midline. Exactly the same trade as we have. Well, look at this. What was it? Where was this beautiful trade? Was it not this one? Exactly the same thing as we had the liquidity above here into Asia midline, into mitigation, right? So exactly the same setup. Build up getting induced, back the candles, takes out the liquidity. Not really any mitigations in here, right? But very, very juicy overall in terms of midline plays in here, right? Okay, so if we have these scenarios, the only thing we can do is wait for. Yeah, I know this is not the nicest entries, but that's the only entries we kind of see in this. Because again, there can't be any relevant break of structures, there can't be anything. That's just a very risky advanced trade you can take. If you do, that's kind of how you do it, as all the intentions have been here. And then you finally aim for liquidity. 1 to 20, is it worth the risk? Damn fucking yeah, it is. Right? Okay, and then obviously choops it. So not too bad. Again, more like an advanced trade. Again, sometimes it's not that nice. Sometimes it's definitely not that nice, and we have to take what's presented. All right. So I don't see anything in here. No build-ups, no nothing. Next timing, obviously, is London, New York trap. We would be fussed about something. So we just wait to see what New York trap brings. And New York trap bill brings a build-up in here. Okay. So build-up being induced to the high side in here. So let's see. Okay. So so usually I would say this would be done, but now seeing the triple bottom with no liquidity target to the left, I would say this is definitely not done. So this is a triple bottom. So we have this inducement high to go lower once again. Technically induced is equal lows in here, but more is like triple bottoms. So again, expect this to be induced to the high side and then go into mitigation areas in here. We don't really have anything in here, so don't pull something out of yours. Maybe just check them 15. Yeah, also nothing really in here. So that would be a tricky scenario. There's probably nothing in here, but let's see. Goes higher. Okay, so there's not really anything in here for mitigation. Let's see if we have anything on M1. Also not really anything. Nope. Not really anything in here. If it comes back, London close in here, these areas, then we obviously can take them. Let's see if it comes. Nope. It's equal highs. Well, now it's getting a little bit too late. If it induces and taps into the mitigation, which it does not. Okay. So then we just missed all these moves. Fair enough. So yeah, the only thing we technically had was this nice one in here, Frost Materials trade, and this advanced trade in here. But overall, challenging day, being honest. Intention-wise, should be nice. Now we have London close, should be inducing. It does. And yeah, that technically ends the day off in here. Okay, goes even lower. Approaches soon, the small money trap. Before that, okay, seems like this play is over. As we have, again, baby build up in here. Induced low. Interim break the structure. Obviously wants to stay away from the mitigation here to tap in probably later to give like a nicer play. Or maybe God just smokes it overall, never knows. And doesn't even give us this entry. What did it? Maybe it did. But again, this is just a minor play in here, nothing too crazy. Still okay. Again, technically, that's your let, that's your EDM, or should be, but this is just the very late let in here. Right, but again, nothing you should be too crazy about it, but if you want to take this, obviously you can. Trade one push higher to take it out also. Comes even lower in 1 minute probably. And here it gives a re-entry. And then, yeah, takes out the high. And that's it. And then obviously Asia. Okay. Okay, that's very interesting. Asia just building up like crazy. Building the triple tops in here. So these plays are done, obviously. Alright, so that's a very interesting Asia play. So probably same thing though. Probably end this video right here. Make the next one in here. So call this probably just challenging day in here, as it just didn't really have the nicest opportunities in here. So yeah, just challenging day in here. And we probably try to focus on on other things on this day to mix it up a little bit.
Welcome aboard the Litiverse, everyone. So this is, of course, your last chapter in the Lit adventure. However, it is a pretty crazy one. We did utilize the Lit madness, as you can already see on my screen, and technically you would have known about this before you get to this video. So in that sense, what we will be doing is covering a very nice pair, or example, should I say, and we have covered a variety. I will be covering US 30. I'm not sure what Camel Reem actually covered, but again, the whole point in this is showing you a variety of different pairs, different examples, all within the lit pairs though. So that's really important that we do cover the pairs that we consistently have been covering to encourage you guys to actually trade them. So just before I actually do go into it, I wanted to mention that a lot of these planets that you see, you would have known by now what they are. They don't always present. So sometimes you may get a very nice New York Trap trade, but London Open wasn't nice. Or London Open is nice, but New York Trap isn't nice. That's completely fine. But the whole purpose of this is pretty much almost all planets can be used daily. For certain things like higher time frame, not necessarily. But the rest of it, all the intraday planets, pretty much every day. So yeah, it's important you do understand what these planets are. We will cover them briefly as we get along to it. So if I actually do get straight into it, we have got the 4H chart on US 30. Now I know I've chose 4H because technically we are using the H1 when it comes to the planet of the higher time frame identification. However, in this case, H1 wasn't so clean to me, so I went on 4H. You can also do that, of course. Change the time frames as you wish on the higher time frame, whether it's 30 minutes. I would say 30 minutes is the minimum highest time frame, and 4H maximum. I wouldn't go to daily when it comes to this. So 4H made a bit more sense when I could identify direction. Again, something to do with POIs also, which interested me on this time frame. So yeah, flicking through a couple of time frames is key so you can generally understand a clear picture if you don't already. So in this case, what can we already see in front of us? We can see the 4H POI over here. And it was mitigated. You can already see it's been mitigated over here. So with that being said, I actually want to basically cover something very interesting in this specific example. It's actually taken a pullback, and it's a pullback on higher time frame, but on intraday, it's perfect. It's the perfect intraday cycles, but on the higher time frame, you'll see it as a pullback. And this is where I think a lot of you guys get confused with higher time frame implementation, is that you could be trading a perfect intraday play, and on the higher time frame it looks like a pullback. And usually this is like hindsight stuff. Like, you don't need to be looking at stuff like that. Or like, again, like what you see in front of me. Again, I'm marking this up in hindsight. As you can see, it's already played out. It's not like I waited for this reaction and whatever, I took the trade, blah, blah, blah. The whole point in this is we are actually utilizing our understanding that price has reacted here. It's made a reaction all the way down here. Technically, it's kind of mitigated there, which looks nice for smart money traders. Stop loss, not so nice, I would say. That's a pretty crazy stop loss. The chances are on intraday, that probably would have been a very nice trade. I can't tell right now with the screen and the fact we don't actually have the template. I really do go by the template a lot by making my eyes a little bit easier to see things, but I can't really tell without it. 4H doesn't really utilize the template, at least in my settings. I think it goes to 1H for me. So anyways, regardless of that, what I want to talk about is pullback, specifically when it comes to higher time frame and what you can see here. So if I just clear that up a little bit, it's a little bit of a mess. You can basically see that price mitigated here, reacted here. Most smart money traders would not have guessed this is a pullback, because look what happens. Price continues bullish, and maybe they expect it does some sort of order flow like that and continues bearish once again. That's usually I would say the kind of like the strategy they use. I don't know the exact strategy all smart money traders use. They utilize structure and all that stuff as well. But that's generally the idea they may expect. And this is why you see wicks like this, because this is where price is essentially reacting from these areas, and so many smart money traders are getting induced here. They're constantly taking sells. They either wait for the first wick or whatever strategy they use, but the chances are they would have taken a limit entry in here and just let their stops right above here. And in this case, what they don't realize is that price may react down here, for example, or they may be at break even, but the chances are they're never really understanding the market. And this is the thing that I want you guys to understand, is not get lost in a higher time frame. None of us use it. I think you guys probably know that by now. So there's no need to be asking us questions with that when we don't even utilize it. You don't need to understand higher time frame. In this case, I'm kind of using it against higher time frame because I'm actually trading a pullback in this case. So if I just clear that up again, and let's just speed things up a bit more, because 4H isn't really showing us much. So I do want to go on the lower time frame, or slightly lower, and that is the 15M. Now on the 15M, this wick over here is actually that 4H reaction over here. So that's the same thing, just so we can actually understand both charts here of what's what. Now this stuff going on here, I would say it pretty much, comes from here, the previous day, right? And it makes sense when you look at this, like traders are getting in on whatever wicks these are. These could be on the 30M. I'm not entirely sure what they're trying to trade here, but you can clearly see price has reacted. Even the previous day in New York, again, we can confirm that with our confluences in lit and not random higher time frame stuff. Now, what I want to look for is basically an inducement high of relevant liquidity, how I can trade away from it when it comes to intraday, because chances are this may get induced. People don't realize that, where price has already induced a bunch of liquidity low down here. All of this liquidity, this is drawn very, very briefly. Of course, you need to go a little bit on the lower time frame to understand that a bit better. We've had a perfect inducement low. You can see that vector candle over there. Chances are we're going to induce high. We're going to take out zones like such over here. So it's super key we understand we're in the right side. And the only way we really need to understand is understanding intraday. The rest doesn't matter. If you don't understand price action some days, it's okay, then don't trade it. But in this case, it's going to make so much sense on intraday, and hopefully you guys can basically eliminate the higher time frame problems you may have, because it really does not matter. So let's clear that up a bit. Oh, let's draw that back again, actually, that one. So that is H4, basically, the wick that we have. Asia is, well, very small in this specific example. So let's actually understand if there's something else we can maybe look at. So for example, in this case, it's a bit tricky to see on my eyes, but what we can see is potential 15M POI. We are narrowing it down from the 4H over here down to the 15M POI. Again, I'm not so keen on this. I really don't care that much if price reacts in here or if it reacts above it. Ideally above it is even better. But my concern is that as long as my confluences line up on an intraday level, I really don't care what happens here, as long as we get some sort of inducement. What usually happens when you get the reaction within the mitigation zone, which is great for smart money, is that there was enough liquidity going up. It was induced. You get the vector candles, and you've basically got a cycle completion. When it induces higher than that, it's usually when there's not so much liquidity, and essentially the mitigation would become liquidity. It's a little bit tricky to explain, but that's where basically the smart money traps get into play. And this is why when it comes to the start of the day, I'm not too concerned with what's going on. I want to look at the fractal element of the lower time frame, if we can identify a smart money trap within our little 5-minute range that we can see. Let's clear that up and let's go on to the next planet, which is Asia range. Now, you did already see Asia range here on the 15M, but I think it's super, super key that we actually check it properly on the 5M over here. So on the 5M, we can identify it much easier. It's pretty much in front of our face. So there's not much more to say to that when it comes to the 5M Asia range. Now, Asia range, as you can see. What we will do now is actually basically expand the 5-minute chart. It's a little bit tricky to see when it's this small, because now we're going to play on to the 5M pretty much for the rest of this example. It's based on 5M, some bits of 1M. So now we can completely throw away 15M stuff because we don't really need to use that right now. So let's click on the next part, which is a little bit of a bigger view. So I've expanded the view so that you can actually see previous day. Couldn't really see it in the previous example. The reason I did this was it's basically our important guide of understanding where liquidity is and POIs, smart money traps. We technically obviously need to see this. So super important that you do at least look at one day before. Depends. It really is going to depend when I say this, because sometimes there's days where price doesn't move so much. So you can actually go back and look at 3 or 4 days. Again, this requires your mind to kind of work. I can't really tell you an exact guide. You just need to look at price action and the volatility that's going on. In this case, price action was pretty nice the previous day. So what I will actually do first is actually understand cycle identifications. This is super key. You understand some sort of cycle identification in the beginning of the day. And what this aligns with is also which direction is Asia likely to induce. Is it going to induce high first or low first? And this is why cycle identifications come into place. Now, usually with cycle identifications, it does come at Frankfurt. I'm kind of skipping ahead there. But the first thing we actually really need to do here is understand where price can potentially head. So with that being said, we have drawn a bit of liquidity, as you can see, only within Asia. I'm only focusing specifically as the first market intention of the day. Will price induce high or low? Now, what's really key to understand is pretty obvious in my opinion, but maybe you don't actually really utilize it like this, is where is price right now? Or where does price quite literally end at Asia? Like, where is it in the Asia range? In this case, you can already see over here, it's actually pretty high in Asia range. So you can already probably answer a question there of yourselves that Asia might induce high first. You've got so much liquidity going on here and the equal highs. It's pretty much piling on. This is a perfect example of liquidity where there's so much liquidity, we can likely accept price continues bullish and of course induces. Now in this specific case, we also have midline. Now my midline for some reason disappeared. I'm not sure where it is, but we will bring midline up again as the potential cycle identifications we do get. We can have the fast and Franctorius, which does involve Asia midline. Let's try to draw a nice line. That's decent. A decent line at Asia midline, potentially mitigating probably there where price goes in midline, continues bullish to induce high, and then you expect reversal. Or you can simply get the Frankfurt open trade where price actually straight induces high in Frankfurt and then reverses. So we can expect one or two things. So these are the cycle variations that you should expect in the beginning of the day. Our confluences are lining up. We do have a little nice POI. It may not tap it perfectly, but that's okay. I wouldn't necessarily take it direct. And my bias is for sells anyways, and I'll tell you why a little bit later when it comes to confluences. So first things first, I do want to identify more than just the liquidity we have here. Is there anything else we can identify in line with where our inducement may head? Does it induce this high? Does it induce this high? What kind of inducement can I expect? Because remember, when we're just inducing outside of Asia, it is a minor inducement. We need technically a medium inducement to take a trade because that's where the strength lies. And I know a lot of you guys do kind of try to complicate it for yourself when it comes to that. Make sure it's always a medium inducement at first, like that's your absolute minimum. So what we also actually have in line with liquidity is a smart money trap. Now, why is this a smart money trap? Remember, timing, a little bit tricky to draw here, but this is probably around 10 o'clock. This is UTC plus 2. I think it's plus 1 actually at the time of recording when it's the 28th of March. So forgive me if I'm a bit wrong on my timing over there, but that looks like 10 o'clock or something like that. And that's pretty late in the day. So the chances are this is pretty much a liquidity target for price to induce high. So I see this as a smart money trap. Definitely will not consider it as an entry, even if it reacts. Again, I always mention this. I will wait for a sub reaction anyways. I want those additional confluences. So we have potential fast and Franctorius play going on in front of us. So this is a nice little diagram that I did there, but it's basically the same thing that I just drew where it mitigates this point here, possibly reacts in the smart money trap. It could even be lower like that. Could give a bigger reaction, but the aim is to induce high quite a bit. So that way all of this liquidity is being taken out. So next thing is Frankfurt on our planet. Now I have specifically chosen the Fast and Furious baby planet, I would say, as my case here. It could be even a Frankfurt Open. Again, I'm more keen on the Fast and Furious based on the confidences we have, such as the midline here. Now, I'm just waiting for my midline to appear all of a sudden, which it will. Hopefully, it appears now. So you got your midline drawn by me. I did make sure it is 50-50 when I was drawing this because, again, I'm not sure where my midline went at the time of doing this. So we've got Asia midline. It lines up perfectly, actually, with that little POI. And even on a very fractal level of liquidity understanding, it basically creates a very baby cycle or mini cycle, whatever you want to call it. I don't know why I did that curve, but it's basically liquidity to the downside into the POI and then for price to induce high. And this in itself is a little mini cycle. So let's go on the next slide. And what we have is price almost tapping Asia midline. Again, I will still consider it Fast and Furious. I'm not so keen on taking it though. And the reason why is I need a lot more confluences. Sometimes they're pretty clear, especially if your Asia range is a lot bigger. In this case, Asia range is pretty tiny. Look at the day before. It's probably like 4 times the size the day before. Or like the day before is 4 times the size of this day. So I'm not so keen on price specifically hitting something or for a specific entry. As you can see here, the price action is just much easier to visually see. So I'm not keen on basically taking a Fast and Furious trade, but more so the understanding. As I mentioned, it's the understanding that's super key. So with that being said, we also have target identification. If I did, for example, take the trade here, where is my target? Now, I did mention I expect smart money traps, so that will be about here. Now, what else is remaining? We have got yesterday's high also. Technically, we've got about 3 elements going on here, which is very strong liquidity. You've got yesterday's high, pretty weak high. It comes from whatever, 9 o'clock, pretty random. You've got your smart money trap there, and you've got a huge bunch of liquidity going on in Asia. So you've got your minor inducement target and your medium inducement target. So roughly I can expect the little drawing that we had before, which was actually something like this. Let's redraw that, something like that, where price induces yesterday's high as essentially the final intraday target. Before we actually continue, is there something to the left? Now, remember, I did mention higher time frame. We're not going to use it again. But in this case, we did mark up actually a 15 MPOI. So that also will line up somewhere along the lines of yesterday's high and in between this little gap, something like that on average, where the 15 MPOI is above. As you can actually see here, this is a great example. So this is yesterday's high. This is yesterday's high on the 15M. So you can see it's ever so slightly higher than that. So that does seem like a reasonable target going into the 15M. Now, I wouldn't consider 15M actually higher time frame. It's still technically more intraday, but it's our absolute highest time frame for intraday understanding. As you can just see price action so much better on this. So being said, we have our perfect reaction. Again, it would have been a beautiful trade. Technically, you could have taken that. It could have likely been a let. You can backtest this. I'm not entirely sure, but I think it could have been a let potentially. But again, I'm being very, very picky when it comes to these Litiverse examples. So in this case, the smart money trap didn't give any reaction whatsoever. It actually just hesitated. Pretty crazy actually like that. Only created a channel that helps us in our bias for sells soon. But yeah, what we can see is perfect vector candles. Again, the inducement is absolutely perfect in this specific case. Now, with that being said, let's actually check the 15M. Did it tap into the 15M? So we have a nice little screenshot here of basically this wick. This is a 5M. As you can see over here, it's 5M, just for reference. This is 15M, and you can see the wick tapped in perfectly to this little mitigation going there, or big mitigation, as I should actually say. So that is perfect. Price mitigates very nicely. You can consider that extreme mitigation. I wouldn't recommend it though. Based on stop loss, it's really not great. So with that being said, what is our next planet? It is London Open, or London Open Cup, as you can see with the C going on there. Now, we are actually lined up with that perfectly, as you can see here, with it being 9 o'clock. Let's not cover that. With it being 9 o'clock in the morning, based on UTC +2, or Berlin time is probably the best thing to say. So yeah, don't get confused when the whole time change happened. And this lines up perfectly. So right now it would be almost London close, maybe like a minute or so off, or 5 minutes based on this chart. And we can, of course, go on to our next stage, which is London Open Cup. Now, if we go next, what we can actually see is also high time frame. So we ticked off higher time frame over here. It's tapped in there. If it holds, of course, that really depends on price action. But we can technically mark off the higher time frame POI confluences that line up in London Open, because it is coming up to London Open. We've got that timing there. Everything pretty much lines up perfectly to the planets. Now, next thing is extreme limit entry. Did we not technically tap the extreme limit entry over here? Well, we did. So we actually marked up pretty much 3 planets all at once in one little example, which isn't even our confirmed trade. Like, I literally said I don't actually recommend this personally based on stop loss. Again, risk reward is key. So it's kind of funny how it still lines up pretty nicely. But yeah, I would focus on the lower time frame stuff, which is coming up. Don't worry. It will be based actually off this reaction over here. We want to now look for the nice juicy trades that potentially can occur after that. So next stage is understanding what's going to happen in London Open. Now, if you remember the juicy planets going on, we actually have that Bailey going on in the second stage. So we have Bailey over here. We have rated for London Open. Again, the reason I waited was to wait for a reaction by which we can utilize the Bailey, being the break of structure mitigation over here, extreme mitigation after higher time frame POI mitigated, let's mitigation, and EDM after break of structure. So we want to essentially check off these points to take as many trades as we can in that continuation. Technically, extreme mitigation has occurred, so we can kind of take that off. But the first thing that we're seeing right now in front of our eyes is actually a potential break of structure. But before I continue that, the one thing I have to stress, let's just pretend this didn't happen, is understanding, is there a potential lit cycle in place? Now, what I mean by that is, of course, can we identify the intentions? Remember, market intentions are super key. So we are kind of stepping backwards a bit before we consider sells. Is there anything in place? Now, we did obviously mark up Asia low over here, but is there anything more? We want to mark up as much liquidity as we can to understand where price can potentially induce, and that helps us with targets and so on. So in this case, can we identify an intention for a lit cycle in direction of our sell buys? You've already got one that I marked up there. The next one, what we can potentially see is actually, well, before I continue actually, is what can you potentially see? So you can pause the video. When it comes to outside of Asia, let's just move that out of the way. What here can you see? What kind of liquidity is this? Now, it might be a bit of an interesting one because I actually have smart money a lot in my head. So when it comes to liquidity, it's not always your trend lines or your breakout traders, your equal lows, equal highs, support resistance, whatever you want to call it. It is also smart money. And the way you will notice that in this example is actually like this, where you just take up mitigation POIs, especially when they look like this with the whole order flow going on. Chances are they will be taken out on an intraday basis, and they do form liquidity. Now, what's crazy about this is a lot of smart money traders do this. So they enter mitigations, they enter this one, then they enter this one thinking, great, I've stacked entries, and they show off and everything. And they hope it's kind of skyrockets. They'll hold it and assume it will continue. And the chances are they will just give you at break even, or at worst, actually at a loss if they don't even do break evens. So yeah, it's kind of crazy. It's pretty interesting to understand when you really understand smart money traders and their psychology, which is just hold it forever kind of thing. Yeah, but with that being said, we have got a bunch of liquidity going on there, which is super, super nice. However, is there anything else? Is there anything else we can mark up aside from the smart money liquidity? So what we've technically marked up covers down here as a potential target. Let's extend that or something like that. Imagine that's a straight line, of course. So do we have something down there? Is there anything lower, possibly down here or whatever over there? Technically, yes, we have got a little channel going on there. So this is why having an eye for detail is super key, because this channel is pretty nice. Now, from intraday, this is where I would actually leave it, because keep in mind, with Asia being over here and price making a nice high over here, for price to come all the way down, mitigate, can be possible. I'm not going to say it's impossible, but I want to be realistic and actually understand liquidity inducement intentions as opposed to POIs. So for me, that will be my absolute last target. That will be my aggressive target, essentially. So other than that, it would technically be the POI over here. There isn't a major difference when you look at that gap between. It's not too major. So it will have to depend as we are, of course, progressing in the day. If price reaches this, only then can we really understand what's going on. Right now, I'm saying a lot of things that haven't even occurred, but it's important to always be fluid and understand things. So let's clear all of that up and let's actually go on to our Beely again. So back to the Beely over here. The first step we have is the break of structure mitigation. Now, I think I did mention it, or maybe I skipped past what I was trying to say, and we can technically see from London Open over here, little break of structure. It's a bit tricky though on the 5M, so we'll actually bring up the 1M as you can see right now on the screen, and on the 1M you can actually see a potential break of structure around there. It's not very specific. Again, I didn't really use structure at all, so I'm not really too fussed on stuff like that, but it's a relevant break of structure, as we would say. Again, draw better line like such. My line is slightly off there, but nevertheless it's pretty much similar. But look how perfect this is. See, this is why like looking at 1M and 5M simultaneously can really help you understand the picture. Look at this. This is that really nice channel build-up that you see here of the smart money trap reaction. The vector candles look so amazing here. And you pretty much get a perfect example. I don't know what else to say really, because it occurs in London Open. You get the perfect to the minute London Open inducement high where price reverses. I don't know what else to say really, to be fair, because it just couldn't be more clearer. There's nothing really more else. You've been taught this like 1,000 times probably at this point. So yeah, important to always take trades like this. But yeah, with that being said, we've got the break of structure mitigation checked. What is the next one? Extreme mitigation after higher time frame POI mitigated. So let's say that again. Now, if you remember that 15M that we had going on, I'm not sure why I'm drawing that, but let's pretend it was something like that, and you saw that image where price wicked like such, and then whatever goes something like that. Oh, my drawings. Apologies for that one, but that would be actually your absolute extreme. What this is the higher time frame POI mitigated. Now, in this case, the Beely, the E is the extreme mitigation after that. So after this reaction, what is the extreme mitigation? Again, these are technically the different entry approaches, not necessarily specific to what you see on the checklist. Technically, it is a type of entry approach that we do like. So in this case, what you can see, it does line up pretty nicely with our analysis to see an extreme mitigation. Now, to be fair, it's not necessarily extreme as in extreme, my mouse, extreme up there. It would be considering this extreme down here. So basically this one here. It's the only imbalance, the only mitigation left. So that's pretty much your only extreme, if that makes sense. So I would take that. So yeah, I would say it's there, and you can see beautiful word extreme is there also right now. But yeah, oh, I'm out of breath at this point. Gosh, I realize I talk way too much sometimes. We have got our next step, which is let mitigation. So can we also potentially line up let mitigation in line with this POI? Now that would be pretty extraordinary when it comes to all three of these lining up. It would be pretty extraordinary. Just remember, you're not always going to have all of them. You can have one, or you can have two. You can have, I'm not sure about four when it comes to EDM and LETs. Sometimes they appear in pretty interesting ways, but usually not at the main inducement. Remember EDMs, we're going to look at EDMs actually after when it comes to price reacting. Well, that's how I like to look at it, and that's how you've been taught to look at it. So as we said, let's look at the let mitigation potential. So what can we see? Well, we can actually see quite a bit of possibilities over here. So what you can see over here is price did cross the equilibrium line. It was pretty hard to draw. And you, of course, have that line like such. So price may, upon reversal, tap into that. Likewise, here on the 1M2, We have 5M, 1M lining up pretty nicely. And then, of course, the pullback itself, which can give the understanding that this could potentially be a let. Again, I'm not so set on it. It could be. Take the drawings away. And now what we can see, of course, is price reacts to the mitigation. 5M is not so easy to see, the mitigation. 1M, perfectly in the mitigation. Perfectly over there. What do we also see? We see a 5M let. Absolutely amazing. 1M, as you can see, it kind of went over. If I just look a bit closer, it went slightly over. Needless to say, it doesn't taunt our analysis or anything like that. Still pretty set. So yeah, 1M probably kind of just went over the line and slightly disregarded it as a let, but that's okay. That's completely fine. So let's actually see what the reaction is after our mitigation, because of course this is the most important part, is actually waiting for the reaction. Does it hold? Do we get induced ourselves? But let's see. And we do see that it did hold. Of course, you should be at break even at that point anyways. Super key that you are at break even when it comes to that. The planet after this is actually, again, another time frame one, which is the magic manipulation minutes. Now, this one is a questionable one, hence the question over here. It can depend. Sometimes MM1, MM2 may not necessarily show what we want or give signs for reversals or mitigations. It may not always appear, and that's okay. This is why you line it up with analysis. But of course, everything does go in the order of the planets, and that's the whole point in it being a guideline or a reference to refer to. In this case, MM1, we can't really see from our view here, so let's get a line in place. And it is roughly 10:30 Berlin time. Oh, that line's off. Yeah, so 10:30 Berlin time, which is right now the price action. From what we can see, or well, I can't really see anything at all, actually, so I would disregard it as any sort of timing-based reaction, because price is currently continuing the vectors. We're not actually even induced Asia low, or not even at Asia midline at this point. So yeah, in this case, MM1, not really anything to show unless it's a continuation, which it looks like it is, but your trade is over here. So in that case, there's nothing to say about that. So we can actually speed it up to MM2. And now we actually see price does induce Asia low, which is amazing. So we have our first target of the day. So technically that is your target identification, which is stepping ahead a little bit. But the most important thing here is at MM2, which is in the middle over here, that would be 12:30 Berlin time. We can potentially get a reversal area POI. So this is pretty nice. We've had Asia low induced, potential MM2 reversal. So we can potentially expect some sort of reversal. Now, what I'm not actually looking for is an entry necessarily when it comes to the reversal. The reason being is because firstly, I actually prefer to look for the POIs in the direction I'm still looking for. Just look at where price reacted. It's still within a smart money trap. Well, that's very bad to draw, but this is pretty much, oh my god. Okay, let's pretend that's a nice drawing. But you can see it's within this smart money trader or liquidity, I would say, box. So to me, it's not necessarily reacted in a very viable area that I can take a decent pullback trade from. Again, I also need to find a target. Targets are literally for every trade you take, whether it's a pullback, whether it's in the right direction. So you need to have something that's justifiable and not just take random stuff. So in this case, I actually would look for sells again to take out all of this smart money liquidity, which actually is not taken out at this point. And we've all even got a channel, oh, that was off, a channel build up over here as well. So in that case, I still want to look for sells. But again, likewise, I still need to look for a decent entry for sells, something that lines up with my analysis. And only if it makes sense do I then take the trade. So let's clear up the drawings over here and see what we can expect. So when it comes to POI, what is potentially the POI anywhere in our current price action line? This one may be a little bit tricky when it comes to the fact, well, you could say this one, you could say this one, you could say this one, you could technically say three. Now I'm looking for something reasonable, something that makes sense, and something that can potentially line up with another confluence we might have in play. So in that sense, I actually would choose the closest one. The reason I choose that one is potential for actually an EDM. And what I mean by that is understanding where the entry helper is actually when it comes to the POI. So if we look over, well, this is going to be very hard to draw for me. Let's try drawing a straight. Oh, okay. Okay, we're just going to try and understand that is roughly here. That one, oh, that one is there. Okay, my bad. This is so hard for me to draw. I don't know how people do it, but I'm trying to basically draw the so-called POIs, which are these two over here, on the entry helper, and how that can potentially help me choose a POI, especially with the fact I'm looking for continuation. And remember, continuations, what is the perfect trades for that? It is EDMs. So for me, the EDM, when I'm lining up these different POIs, actually lines up really nicely with this one. And the reason why is because that's pretty low over here. So if I expect to pull back straight from here, this reaction, the chances are is that it may actually give a very nice equilibrium line on the entry helper, which could give me an EDM. So that is one of my main reasons also for the cells. Keep in mind, EDMs also, I'm not expecting a crazy target, so that's also super key when it comes to that. These are like those very quick, at minimum 3-to-1 trades. So let's just clear that up and actually mark up what we can potentially see. And I did actually mention this, stepped ahead of myself. So we have obviously got the last planet on the Beely, and that was the EDM that I roughly drew up there. We can draw it up a little bit nicer. So that is the POI, the line I tried to kind of draw, and it lines up perfectly there. Can actually get a nice image there, which is better. And of course, what do we see? A perfect reaction. So couldn't be more clear. It's a really nice EDM, lines up perfectly in our POI. Actually gave a very nice pullback, nothing too long waited, I would say, or not very like messy pullback. It was pretty quick and to the point. So in that sense, what do we expect? What's super key first is with EDMs, understanding where do we target. This is a thing I think, I'm not sure if like how many of you take this seriously when it comes to EDMs. They're not expected to go on forever. So in this case, I will expect my EDM to just break below, literally like that. So yeah, the same line. Wow, I drew that spot on. So yeah, pretty much take out the low. It's usually a 3-to-1. In this case, from what I mentally can see, it's probably a 4-to-1 with my eyesight analysis going on there. So yeah, pretty much covered the Beely on London Open. Pretty perfect. And we can, of course, continue the day and understand what's going on. Now, in this case, remember, we did obviously cover the target for London Open. That technically would be your Asia low. It was very interesting price action, I would say. That technically were the vectors that led to Asia low. So technically you could close it there, but just waiting a little bit doesn't harm you too much because you've got a little low here, a random low off that reaction of smart money traders. So just clear that up. Now, the next thing, of course, is the reaction. Take a trade off, close it. The reason being is because we are actually almost approaching New York Trap. Now, before we go to New York Trap, I actually want to step back a bit and actually show you something so crazy. You've seen it before, so not too crazy, but just crazy when it comes to, if you were struggling to understand the direction for what's going on here in day, understanding cycle variations and stuff, I want to show you exactly what you would have seen in the Lit Madness. And this does relate to the daily cycle identification that you can see here, this beautiful pink planet. And it relates exactly to some of our common cycle variations. Just from your remembrance, should I say, what cycle variation do you think we were playing at when it comes to what you just saw? So we've got 5 over here. So you could obviously pause the video, figure out what it is. And once you're done, hopefully you get the right answer based on what you're seeing. Now, also just important, I mentioned this, sometimes things are slightly different, so important to factor that in. But the most important things are London Open and New York being pretty spot on when it comes to cycle variations. Magic manipulation minutes can change around a bit as well. So with that being said, we will actually bring up the chart side by side so we can actually understand properly. But I will just say, look at cycle variation 1 and now look at the chart we have. Just look how similar they are. It's actually insane how similar they are. So if we just actually mark up what we currently have, it is London Open up here. That checks off pretty perfectly. Even these points over here are POIs to the left. that also occurred. You can't see it on this image, of course. The only difference is the MM1 and MM2. In this case, it was the continuations after the reversals happened. So these reversals occurred, and then MM1 and MM2 continued. In this case, this one was already forming the continuation, and this one made a little baby reversal instead. This is why with MM1 and MM2, it's super, super key. They line up perfectly with the cycle variations. If they don't, then you disregard them. And that's what I did. I quite literally mentioned that. You can disregard them because they just simply will not line up in a cycle variation. Now, the only thing we're missing now is New York Open, or New York Trap Open, I would say in this case, and London Close. So with the cycle variation we have, where we've actually induced Asia low here, in this case MM2 did it, we are actually right now at New York Trap, which I did mention. So what we can potentially expect is quite literally what we're seeing over here, which is New York to create a reversal, London Close to potentially give us an entry, ideally some sort of mitigation like that, and then sell off. Now let's clear that up and actually draw a better illustration, as my drawings are horrible. So something like this in an easier format, that would be our ideal trade. Reason being is, as much as we can guess some sort of POI to the left, that's probably slightly off, isn't it? Well, I can't even draw that properly, but even if it's somewhere in between here, there, I'm not going to just take that as a limit. I want to, of course, wait for the reaction after. And this is also key why you take partials and you basically close certain trades, because when it comes to your New York Trap opening right here after the EDM has occurred, you can expect a reversal, and that might even cut into your trade itself and hit you at break even. So for sure, you should be taking off position actually at Asia low or Asia high, depending on, of course, the cycle variation. Let's actually bring up our original chart back, which is back here. So we're back on that chart. Now we have New York Trap in the picture. Let's get that timing up a bit nicer. So it's pretty much spot on, maybe a minute or so, or 5 minutes. Slightly off, but we are, of course, going to wait for what New York Trap does. If we can take, again, the same type of situation as the London Open Cup, which is the Beely over here or over here, then great. If not, then we will also disregard it. As I said, you only need one perfect trade, and London has clearly proven to be absolutely perfect. New York Trap can potentially also show the same thing, so we obviously need to wait for price to react a little bit to see even our first thing, which is the break of structure. So let's actually speed it up a little bit. Yeah, so it's actually, again, as mentioned here, it's not the best when it comes to the confluences. You can even see here, it's pretty much liquidity going on. I don't personally like that, hence this will be an automatic no unless we get some sort of inducement lower to then continue. But keep in mind, New York Trap has already started, so it's okay to just watch and again aim for sells based on cycle variation 1. So let's clear that up and actually wait and see what happens. Amazing. So now we are outside of New York Trap. New York Trap simply was the continuation. Nothing too clean. Actually, we even see that perfect inducement low of the liquidity. So when it comes to understanding intentions, it's absolutely perfect. See, just understanding the intentions is amazing. Like, you don't even need to take these trades, and they're just so perfect when it comes to understanding them. Like, I wouldn't take that, but it's absolutely perfect when it comes to literally everything you should know by now, even the basic lit cycle. With that being said, we are almost actually approaching our very, very last stage, which is the London close trade, which is pretty much the last thing we need. And if you remember the cycle variation, it will come across something like exactly like what we're seeing. We have the inducement high. I want to wait for some sort of reaction. And ideally, this mitigation here would be perfect to take sells and continue all the way down for our target down here. Something like that. A little bit neater, hopefully. So let's, of course, then wait for a reaction, as we can see. And our mitigation still appears to be there, which is great, because now we can, of course, mark it in a second. So now we can draw up a box, which is absolutely perfect. So the final trade of the day, absolutely perfect, especially with the target we have. So we can, of course, wait for the very last thing, and that's if we mitigate. And that is absolutely perfect. So I don't think there's anything more I can say at this point. Everything's been pretty clean. Probably went through it a little bit too quick even, or even waffled maybe also at the same time. But just take a look back on that cycle variation thing and how perfect this was, with only the MM1 and MM2 being slightly off. But when it comes to London close, New York Trap, look how perfect they are. Reversal, There's continuation down there. London close forms a continuation, which gives a perfect mitigation. And notice how all the trades I took were actually only in one direction. They were the only trades that gave the perfect confluences. So we even have that extreme mitigation. Again, didn't recommend that because that's the absolute extreme. But then we get the let mitigation here after that little break of structure down there. And then, of course, what happens as price continues is we get a nice EDN, fulfilling the whole BD requirements, only for price to then quite literally reverse at New York Chap. No trade at New York Chap, unfortunately. We could have utilized Beely again if it was a bit clearer in terms of confluences. Nevertheless, what happens in London close gives us the perfect sell entry. So there's just so clean. I don't know what else to say really, other than study it and apply the Litiverse. It's really powerful, and only apply when it makes sense. You don't have to utilize all the planets. You really don't. But what makes it nice is having these visuals. It really builds that picture in your head. So yeah, with that being said, I would say congratulations on making it to the end. I don't think this is the end video, but this is my last video with the chapters. Kind of sad, but at the same time, I hope you guys learned from it, and I hope you guys got some sort of value even from myself. And again, Discord is always there, so we'll catch up in the Discord if you have any questions. And that's pretty much it. So yeah, take care everyone, and we'll catch up soon.
Oh, and there we are. For a spontaneous quick hot seat session, why not? Spontaneous ones are usually always the best. Yeah, feel free to unmute as well. Again, we are between legends, so all good. And yeah, guys, if you have any questions, whatever, about anything else, just you can speak up, you can talk in the chat, whatever it is. We have a little bit time. Okay, yeah. So let me put you on full screen so my old eyes can see shit. Okay, let's do EU actually, because I think that was the Mona of the day in terms of overall plays. If you want to just, can you change to under or, okay, erase, perfect. So let's cut actually right as we always do, just straight from Asia. Okay, if you want to cut it, replay mode. Perfect. So if you can give us the overall breakdown of how you had it going into the day, what you had the previous day, and like what do you expect, like what cycle variation maybe, what did you had the day earlier, what's the key liquidity points, what happened in the day before, so what's the logical consequence of what to expect today, if you want to give us a quick summary.
All right, so when I started off with the build-up.
Even if you start like even earlier than that, like what happened to the actually yesterday, because that's obviously always important of what to expect in the next day after that.
All right. So basically on the hourly, saw the, what's it called? The strong inducement low. So from there, we knew it had to go higher.
And if you look at this day now, had this inducement low, if you go back. So is this inducement low that happened here, is that relevant to a price action right now?
No.
Exactly. So what is the relevant structure or inducement point we should look for?
Previous day or current day.
So if did something significant happen in this day, maybe?
This day?
Yes.
Inducement high.
And what else? Did it induce actually something significant to the left?
Right here?
Yeah, but you have to zoom out to find out, right?
Yeah.
So did this have a good inducement? Yes or no?
Yes.
Exactly. So we can at least mark this a medium inducement. Again, some people might say, oh, what about this wick? Again, you have to look at structure points of liquidity, not wicks. It's very unlikely that people entering in the wick. The structure inducement points is here. The smart money trap imbalance is right here, right? That's the imbalance for smart money traps. The point of interest for smart money traders go right in this candle in here. So they're getting for fuck's sake right away. So this becomes a medium inducement right away. Okay. But on a bigger picture, yes, you could see that whatever in a week from now, whatever, you could see this as potentially equal highs to get smoked at some point. But for this play and time we had it, it's 100% a medium inducement you want to trade away from, right? So, and if you had like again our rule set, that's our imbalance from the inducement, right? And we can expect some sort of mitigation. And as you always draw it as well, build up, and this is obviously the inducement out of the build up high, also structure inducement, perfect characteristics for a medium inducement. So what can we expect for the next day of the medium inducement?
Trade away from it.
Wasn't it also an imbalance flip on the weekly? I don't know. To be fair, I never look at the weekly chart, but maybe you could be right. I never look at the weekly to be really fair. Okay. Yeah, that looks pretty good on the weekly, actually. Good eyes, Eduardo. Yeah, so for the 1 hour, we definitely had a medium inducement we want to trade away from, right? So again, what can we expect in this day?
Possibly what's it called? London Open knockout.
Mm-hmm.
Or a full daily cycle.
Perfect. Okay, so we have our extreme mitigation here, extreme point of interest for the 1 hour, right? Let's see if we can refine it, because we don't want to trade 1 hour zones. All right, so if you look at it in the 5, how would you refine that?
Right here.
Yeah, you could do it like this. Or again, if you take the overall supply candle, what would it be? Yes, exactly. That's how I had it as well. I think Sakba had it exactly as well as that. And we'll dig into her entry as well. Okay. So to not give anything away too much at this point, because you want to make it a little bit challenging for you. Oh, wait, I give Rolf just the host as well. They can manage it a little bit. There we go. Oh, she's actually here as well. The queen in the house. Interesting. Lady audience, always good. Okay, so your turn. I don't want to give everything away.
All right, so from here, also previous day, I saw this build up mini cycle. Inducement high into this POI, so we were looking for like you said, to come back up to this POI to trade away from the inducement, inducement POI.
And even if we again now forget about the timing aspect, what we have in here, build up, inducement high, that's your vector candle, right? Perfect. What does it do? Induce structure to the left. Perfect. Right. So again, this is also something if you like, for example, like Dwayne in Australia sitting and you wake up right now, get your coffee already. That's a potential trade you also can take, right? And you aim for what? But at least the next structural points, they're down there, obviously in the process when they get built up. Obviously, you look for the liquidity point, which is the open price. Again, you don't expect Asia low to make whatever new Asia low inducement if Asia low is in the process. Anyways, you have to forget about Asia range in this process completely, right? So again, first option would be the open price, and then if the price action turns out, you see the equal lows being formed, and obviously then you aim at this after that. So that's again why I'm not a big fan of Asia, because it always gives like very watered down targets, and that's not overall a nice thing. But I hope everyone can see this baby cycle in here anyways. Build up, inducement high, vector candle, inducement of the structure. Perfect. You want to trade away from the inducement. There's your inducement mitigation right here. And obviously you just need a proper target. Okay. So the next thing that we have now, because now we're in the zone where it's getting interesting, because Asia is about to close. And would you mark this channel like this as you had, or would you maybe adjust it a little bit?
Adjust it a bit.
So you can make it a wedge like this. That's perfectly fine. Or like how I did is like that was the equal lows for me. What broker are you using? FXM, I can't remember my broker, but I think I used FXM on that one as well. It was kind of equals, if I remember correctly, in the edge. And then also this baby channel in here, right? From here to here. Yeah. And that also gets induced low, equal lows getting induced, channel getting induced low. That's your vector candles. Perfect, right? So what can we expect from that point on?
Trade away from it.
Exactly. What's the next liquidity target in terms of medium inducement we would have?
Asia high, right?
No, medium.
Medium inducement, low you mean?
Yeah. No, so the medium, that is a minor inducement if it does that, right? So what would be the medium one?
Oh, this one.
Exactly. So if you have to zoom out, so the only medium structure point you would have is actually this one. This one, again, is already taken out by here. Right? And if it gets out here, it's just a minor inducement. We don't care too much. We want medium inducement. If you have a medium inducement into possible mitigation, that's obviously pure gold, isn't it?
Yeah.
Okay, perfect. So let's see what we could have made out of that if we just let price action on a little bit. So if everything clear so far, what we made, like in terms of pre-day analysis, even intention-wise of what should logically happen, we had a medium inducement previous day. Want to trade away from that. We're just looking for opportunity trading into it now and then trading away from it. Make sense for everyone? No, yes. Can't see shit in the chat. What's going on there? Only Dane. Okay.
Yeah.
Perfect. That's good. Wow, Adam. Okay, perfect. So now we're having obviously a new mini cycle induced low. Next target is the medium inducement, and we had our potential extreme mitigation from the medium inducement the day previous for potential target. So the only thing, again, we're looking for now, buy trades actually away from the last inducement into medium inducement. That's the only thing we're worried about right now. We don't look for shorts. Again, we have an inducement low. We have a target high. We're just looking literally for entry opportunities, okay?
Yeah.
So Eric, your turn. How would you do it?
All right, so from this point on, you want me to stay on the 5 minute?
Yeah, sure.
All right. So from this day on, we had an inducement low, BOS. Look for a
perfect
entry.
Eduardo, yes, also always, I mean, targets in terms of mitigation zones, of course, and also targets to trade away from. Right, so that would be our extreme mitigation right there. That would be perfect scenario. So let's see, once we have to adjust at some point, maybe.
Wait, I can go on the 1 minute, right?
You could, but you also can stay on M5. That's completely up to you. If it makes sense for you to go on the M1 right now, you could, but why would you go on the M1 right now?
Oh, yeah, that's true.
That's also maybe something everyone has to pay attention to, not to go to the M1 too early. You should only go on the M1 to literally refine an entry, because you will get lost. If you just jump into the M1 now, you see maybe another potential baby cycle and be like, oh my God, this and this. But again, the only thing you see is inducement low out of Asia and here. And now, again, maybe you have to adjust now, Eric, if you want to check. Because what is going on here? We have technically, yes, a minor inducement, but what is this in the greater picture?
Channel buildup.
Exactly. So it's yes, a minor inducement. Is it the inducement we're looking for? No. Right? Is it a minor cycle? Yes. Right? We have a buildup. We have a minor inducement high out of Asia. Right, so then the only things we have to do, also pay attention to timings, right? So what's our potential timing areas we have?
Frankfurt Open, London Open.
Yes, what are you on, like UTC, what is it, -5? Yes.
Right,
so I'm not sure what Frankfurt would be for you, but it should be,
ahead.
Yeah, Frankfurt should be already done, is it?
You want me to switch?
As long as you know it. Okay, what is it? Okay, so Frankfurt obviously gave this little pullback. What is a price and push price higher out of Asia high? Perfect, right? And now the next time window we would be interested is what?
London Open.
Exactly. So we can literally mark up London Open with a line or something. You could refine this POI, yes. But also at this point, we have to also think about the greater picture. What is another liquidity point of interest other than this day open price if we have an inducement high? Someone remember? a liquidity point just based off Asia range. Very good, Eduardo. Right? So always keep these liquidity points in mind, especially if you have a build-up. Again, now you have to look visually what could happen. If you have an inducement of low out of the build-up, there's two potential scenarios. The one thing we know is that this is getting a small money trap, right? Because again, we have an inducement high out of Asia. High, again, that's the minor inducement. We want to induce liquidity. So now we know this is our smart money trap. Okay. The only thing after smart money trap is if it gives a little reaction and then goes lower, or if it just becomes a fox egg and taps into one of our liquidity points of interest. That could be Asia midline or the day open price extreme in here. So we can expect both. If this is smart money trap, gives a little reaction and taps into here, I would definitely take this point of interest of Asia midline. Okay. So what would be the Asia midline point of interest? If you zoom, my eyes are pretty bad. Can you zoom in a little bit?
Oh, yeah.
Can you make that a little bit? There we go. Maybe a little bit more. There we go. Now we can see shit. So what would be the Asia midline point of interest? There you go. Perfect. Right? Why does it make sense? Because again, we would induce structure, low first out of the smart money trap. Right? Perfect. Induce liquidity. Again, what does smart money traders see? Change of character. Oh my God. The only thing, again, really taps into liquidity, mitigates the point of interest and would go higher. Right, and the other extreme target potential point of interest would be this one, but I would definitely prefer this one, but just based on Asia midline, right? And this one is technically only the open price. We already technically was the inducement of this point already. Okay, so my personal preference would be Asia mid for sure. Okay.
Yeah, it makes sense.
Okay, so let's see how this baby played out. Right, so also messing around, giving us the quadruple top and then faking the low, perfect. Now taps into the smart money trap. Again, people are looking for continuations. They tapping in right now. Right? Not us. Like, why would it do that? We're looking for, again, inducement and then boom, okay. So now they're having that continuation orgasm, right? They'll be like, yeah, we got the final direction. Perfect. Awesome. Right, but guess what? Now it's London Open to the absolute minute, induces them high one more time. Again, if everyone is in the buys now, where are the stop losses from those people? Everyone who bought it, the whole channel build-up thing, smart money traders, where are all these buys? The stop losses.
Right.
Where's the stop losses? Below here and below this point. Right, because they're all getting excited. Yee, look at this go. In London Open, liquidity enters, fakes the buy side direction to the absolute minute. What did we expect in the first play though? Smart money trap into valid mitigation. Okay, what a surprise. So all makes sense.
Yeah, it makes sense.
It's Mr. Fisher.
So we had another inducement high, vector candle.
Yes.
So you trade away from it.
And there we go. Now, obviously, we have exactly what we wanted. Structural inducement, right? Fake change of character. If you zoom out a little bit, did we have any medium inducement yet?
Not yet.
Exactly, not yet, right? So why would we sell this thing in here? It's not a medium inducement. We just have an inducement low first of the build-up and now into valid mitigation, which is also Asia midline. Perfect. Take the trade. That's literally it. Or if you don't like this trade, you can wait for after confluences of events after, right? What's the other thing which could give us confluences? Maybe timing. What's the next timing window?
MMM1.
This should be 9, like London Open is 9.
Oh, my bad.
And UTC plus 2 MMM is 1030.
10:30. My bad, I forgot.
Not a problem. So that's again our ideal next entry point of interest, right? Or timing confirmed entry. So if we like to take this trade right off the imbalance fill in here of Asia midline after the fake structural inducement low into the medium inducement, that's 100% a trade you can take. Talked a lot of times, so that's one of my favorite trades. Trading into the Asia midline, and then trading it into the medium inducement. They're 10 times better than looking for all these crazy reversal trades in here or in here and then getting 5 losses in a row and shit like that. No, literally trade into the liquidity, look out for the medium inducement targets, look for these baby cycles, and then trade away from the baby cycle into the inducement. That's a way better trades all the time, okay? Same thing yesterday. It was the picture perfect shit. I'm very glad a lot of people took the longs in EU yesterday even. It made me very happy. Because that's exactly my favorite trade right there. I missed it though yesterday. I was asleep. Amateur move. Right?
I actually took this buy.
You took it?
Yeah.
There you go. GG. Yeah, that's Simona for sure. All right, comes very close, gives you some sweaty palms. All good. All right, and then it becomes even nicer. Again, fakes a smart money trap in here. Whatever goes on in the M1 here, we don't care. We expect like a fake reaction and potentially gives us a re-entry, right? Because what do we have in here? Imbalances build, right? So that could potentially give us an order flow entry, exactly how you mark it up right now. Eric is always on fire, huh? Catches some monas and always just so casual about it. Just like not a big deal. Me taking all the intraday trades already. Right, so now it's even nicer, right? Double fake reaction of the smart money trap. It was really nice, huh?
Yeah.
I would mark it more like equalized, actually. But you can mark it like this as well if you want.
All right.
Right, so if you have this, boom, you marked it up. That's our build-up, inducement low of this baby build-up, right?
Yeah.
And if it taps into a potential mitigation zone, which it does, what a surprise. And when does it happen? Only magic manipulation minutes. What a surprise.
For this one, would you refine it?
You could. Let me show how you would refine it. If you're going to go to the M1, how would you refine it? Can you zoom in? My eyes is getting too bad. Okay, so you have to refine it here. So how would you do it? Okay, be careful about refining it like just with random candles. If it's not clean, what's the best way to refine it?
The extreme.
The extreme, or obviously supply demand candles. Like what would be the supply demand candles?
Like this?
No, the last one's the extreme. Like what's the supply demand candles?
Oh.
All right, so what's the last two buy or like in this sense bearish candles? It would those be those two black ones, right?
All right.
So you have to take all the supply zone, and then that's technically, again, that would be your refined zone, but it's even bigger than the other one. So whatever.
Yeah.
But that's technically the logical point of you should do it, because again, you're running in the risk if you're taking those random candles in here. Okay, what if it just comes literally like this and stops you out a break or whatever, even stops you out fully and then is off? Is that worth it? No. Take the full zone. Again, Sakpo and Cam will talk about that in week 7 a lot more. Take the full demand zone and don't risk this stupid like baby stop losses for like one tick and then miss the whole move off that. Right? It's a perfect valid cycle. It doesn't matter if the stop loss is a little bit bigger, at least you're in the trade. Right?
Yeah, it makes sense.
Right, and when does it happen? Also to the absolute minute of magic manipulation minutes. So okay, definitely a high confirmed trade after the inducement, after the build-up, after the inducement low of the build-up. You had your medium inducement high to the absolute minute, taps in the extreme of the demand. Boom. Literally, I would say an 8 out of 10 setup. The only thing that would be better if you could have refined the zone more precisely, then it would be a 9 or a 10 out of the trade. Okay.
Yeah.
You could also take it from the imbalance, yes. But again,
Alright.
it's just better to take the supply, the mount candle, whatever, supply them on. You know that shit. Doesn't matter how you call it. Supply them on
Cam
both.
block?
Say again?
The cam block? Makes
Okay.
sense.
There we go. And that's our target, obviously. Marked it up perfectly.
That was the thing with my target too. I was targeting these highs.
Yeah, you should not target the medium inducement to get taken out again, right?
Alright.
So if you have a medium inducement, you want to trade away from that. That's why this becomes a point of interest. Because again, this is a medium inducement. You want to trade away from that on the bigger picture. Now we're having the intraday plays. Of course, we can look for buys into it. And then the major play obviously is to sell away from the medium inducement.
Alright, makes sense.
All right. So our target here is again the medium inducement. But this medium inducement, I think everyone can agree, has way less effectiveness than this insane 1 hour medium inducement one we had, right? Again,
Yeah.
the best target for this buys in here is this structural point. And then the moment obviously we're tapping into these areas, you have to be patient about potential reversal trades.
Alright, makes sense.
Perfect. So we have the Magic Manipulation Minute 1 entry. We had the London Open entry. Perfect. That's technically London Open Cup trade continuation, and that's the re-entry Magic Manipulation Minutes. Lovely shit. All right, so let's see. So remember, it messed around a little bit. Okay, builds the equal highs. Again, should that fake you out if it gives the equal highs? At this point, I would even adjust my target higher. Because again, if they build equal highs, what will they gonna do to the equal highs? Of course, they're gonna smoke them, right? And if you take profit, literally gets missed here by like 1 pip or something, whatever, and then just put your target actually a little bit higher because they come for these equal highs and will smoke them later.
So would you take like partials here if you were to do that?
Yeah, depending on if you actually look it up and your chart is literally there. Again, I would not manually close it if it's literally about to hit TP for like 1 tick, but then reverses. So
Yeah.
I just leave, and then it pulls back. You're kind of shitting your pants and kick your dog or something like that. But again, it's fine because it's equal highs, so you should expect them to come higher, especially if you're right below the 1 hour like point of interest. Right, so it's completely fine. But I would not manually close that here for sure not, because again, why would you close it like 1 tick below your TP?
Yeah, that's true.
Yeah, you can kick the door or the dog. I would recommend the door, not the dog. Don't kick the dog. Again, that's again what fakes people out then when the target is not hit, and they'll be like, oh my God. But what is the other thing though? Again, support traders, or in this case, resistance traders, they're getting a hard on here because again, they're having the reaction from like the double top, isn't it?
Yeah.
Right? And they see these candles and be all excited. So it's all, again, you have to think in terms of liquidity and how they literally fake out everyone. Again, they're faking out people who are having the targets above here. They're giving people excitement that they're literally taking it into the fake resistance reaction. They're faking you out of the reaction, like everything. It's like so much combination all over. And again, at the other point, they want to go higher. So the order flow most likely is not going to happen because again, if they push price higher, they don't want to give people a chance to get in there. It's the same stuff all the time.
Right, makes sense. Also, breakout traders.
Oh yeah, and Cam just says fake break of structure too. Yes, even here again, a Koch after resistance holds. Perfect. Right, there you go. Again, that's the Koch. Thanks for reminding Cam, and that's the obvious smart money trap in here. And they all getting smoked once again.
Inducement low.
Wow. Mr. Boykers, what happened there? What inducement? This one? For the buy side. Oh, okay, then all good. That's perfect. Yeah, and see, that's how we could do it. Again, exactly as Mr. Boykers does it. Don't look for these random reversal trades after like these fake Kochs and shit. If you're literally trading right into the liquidity, Again, use this fake Kochs for confirmation that you're literally looking for buys into the liquidity.
All right. So do y'all mainly stay on the 5 minute only, right?
Yes, again, you only switch to the M1 if you see something significant in the M5. The only thing, again, use the timing for your compass, as always. Like, what's the next timing you would be interested in something?
MMM2,
Okay, then mark it up.
12:30, right?
Yes. There you go. All right, so building the triple top here. Oh, too bad. Too bad, didn't hold. Was such a strong resistance zone. Even gave a Koch after. Oh, how did it not hold? What a surprise. Like, oh my God. Crazy.
Resistance.
Crazy resistance, right? And now it's the first time, again, they're tapping technically the 1 hour point of interest, but again, it doesn't mean that they reverse immediately after that. Now we're entering the magic manipulation minutes, so we can look in the M1 if you want to.
All right.
All right, so what is the only thing left in our rule set in terms of entry helper? We didn't even look at this thing once, but let's use it. What is maybe could happen in magic manipulation minutes 2? What we not have yet, or don't have yet.
Inducement.
Inducement into what? If you look at the entry helper at this specific price point.
EDM.
Exactly. So our first EDM also. Right, we had the inducement. Technically, that would be your let, if my old eyes see that correctly.
Yeah, that is.
Yes, and then again, the next thing, as only surprisingly always the same thing. Inducement, let, or whatever, this let. Again, we will not be interested in that let. And then EDM in that order all the time. It's literally always the same shit. And then again, you're trading it higher. In this case, you would be careful about your target because technically you're already in the 1 hour zone, so you don't expect too crazy movements out of there, but at least target new higher highs for 1 to 3 trades. That's completely fine. If you do that, if you want to trade obviously higher to the defined POI, you can do that also, but just a new higher high, that's all good.
All right. So in this case, would y'all be like, if y'all were to enter here, would y'all
Yes.
be targeting the imbalance fill for the refined entry?
Yes, 100%. Again,
Yeah.
makes it so nice because you have the structural inducement low, gives the Koch again, taps into the imbalance zone, is also the EDM, only rule based, and what a surprise. Only to the minute, magic manipulation minutes 2. Like, guys, come on, is that always the same shit? It literally is. You can't make that shit up. It's always the same shit. The only different thing is, or difficult thing is, that again, you be like, oh, fake Koch. Oh, I put my limit here. Oh. And then again, you're getting stopped. But you should not be surprised. Again, don't focus so much on these reversal trades or they will fuck you up. There's so... Look, we did not even look for one single reversal trade in here. And we can't even make up a L even if we wanted to. You only can make up these reversal trades all the time.
True.
Right? So that's why you wait for 1 hour zone for confirmations after. Then again, if the cycle is done, everything is done, boom, then it makes sense. Away from medium inducement, then you can expect a reversal trade. But before that, continuation trades, easy. Yeah, they will not look so fancy, but they're way more efficient. Refund.
Also, another thing that I saw was that these vectors into the mitigation.
The vectors into the mitigation.
Yeah, these.
Yeah, I'm not sure if I would call them vector candles, but yeah, relevantly more bigger candles, yeah. But yeah, you're correct technically.
All right.
Same thing again. Find the build-up, which direction get induced, low. Find the build-up, what direction get induced, low. What a surprise, we aim higher. Same stuff all over again.
Yep.
Right, okay. So let's see if the magic manipulation minutes held. What a surprise. Oh, even gave the perfect re-entry again. Okay. Okay. I'm done here. Okay. Fair enough. We take it. If they really want it, right? If they really give it to us like that, okay. Only to the absolute minute. Like, what can you say? Seriously. Like, what? To the absolute minute gives the perfect mitigation entry after the EDM, and your aim for new highs. Perfect. Okay.
Another build up.
Yeah. So now I just would actually switch to the M5 again to see the bigger picture, but you can stay in the M1 also if you really wanted to. Because now we just again interested on when now the reversal trade comes, when it makes sense. And if you over refine it too much, as you can see, that's a little bit tricky because again you have your refined point of interest here. And again, you don't want to get into this thing like, oh, that's the high. Then you're getting an L here. Oh, that's the high. Then you're getting an L here. Oh, that's the high. That's the high. That's the high. And then obviously it technically only would be in your point of interest anyways. And then it makes sense to take it.
Yeah, so by this point, just be patient.
Exactly. So again, I would be out of the buys for now because again, you don't want to pick whatever, be lucky on picking the perfect peak.
Out of these?
Yeah, out of these. Oh, they already done already, right? And now the final buy is out also. And then again, we're looking for the prime, technically direction anyways, which is the sell side, away from the medium inducement we had the day previous, just looking for it when it taps into the refined point of interest. And then we're looking for confirmations to enter it.
All right.
Right, so now if we want to get into this POI, again, now we can detect some sort of vector candle slowly, right? So if you want to tap, refine it to the M1 now, this point of interest in here, just go to the left. So now we're taking the M5 point of interest. How would you refine it? Okay, so you have, again, what's the highest point is here, right?
Yeah.
So you 10x can put this point of interest, the high one, or this is the relevant break of structure point, and this is the push that led to the relevant break of structure, has also put a balance in here, right? So you can take those two POIs for approach one, only those two, either the extreme or this one.
Like that?
Can you zoom it in a little bit more?
Yeah, my bad.
There we go. Okay, yes, you take this white candle, light gray. Exactly.
All right.
Just like, wait, let me remove my. No, just the white candle. Yeah, there we go. It's correct. Boom, and what a surprise! It already taps in there. Okay, so now we just don't randomly want to trigger. Again, if you really want and you're up for the day, that's your approach one right there. Again, people ask, is it limit order, is it market execution? You can do both. Obviously, if you don't want to monitor price action, you can fire limit order. I would be generally a little bit, again, as all in the beginning, always be, you will take the most L's with the approach one if you're not used to it so far. So again, we don't recommend approaches one at the beginning stages. If you're familiar, you can. You also can put an approach one here, put a stop loss above here. That's just a very big stop loss, right? But you could do that also. If you want to wait for more confirmations, that's the way to go. Okay, you should do that. So just wait for the moment. Again, if you're really comfortable with it, there's your approach one. But what's better than just putting an execution right there, wait for a proper entry after. Okay, and we will do that for that example, okay?
Right, makes sense.
So what would be the 10 out of 10 confluence you would have? Break of structure into inlet. Exactly the imperfect. Right? So that would be the internal or the relevant break of structure. And if you get that into inlet, boom, 10 out of 10.
All right.
If it tapped into a refined 1 hour zone, absolutely gorgeous stuff. Okay, so does it give it? No. So, but again, what do we see? Equal lows. What is the extreme mitigation point? We take again the last. Again, that's the new way of you refining it. Thanks to Sokbo and Cam.
Oh, my bad.
Right. Again, we're taking exactly. There you go.
Gotta get used to doing that.
Yeah, and also what do we see here? Our beautiful tool.
Crossover.
Exactly. So we can expect a what?
A let.
Okay. And if it appears, we'll probably take it. Okay. Stays a little short of it. That's completely fine. And it taps to the absolute speckle. Close enough to a let. There you go. That's your Mona.
When I was live, I was seeing this POI too, but I wasn't really sure about it. When I was
As long as you saw it, that's some good shit. Again,
Yeah.
if you just use the entry helper, maybe it would have give you confidence about it. But if you saw the sell and we're preparing for the sell, congrats. That's the way to go. The only
Yeah.
thing which is missing is the execution. And then again, the only thing after that, I think, if I remember correctly, there wasn't too much entry opportunity after that. And then it just a big drop happened with coincidentally the news. What a surprise. Only trading away from the medium inducement of the perfect cycle fulfilled, giving us the perfect entry after that. Like, okay.
Yeah.
Like how random the markets are, huh? How random.
Very.
So let's see what happened actually.
By this point, are y'all still looking for entries on them one or
Yeah,
not?
you definitely mark up this build up, whatever, like properly, not like exactly. Just mark it up. Exactly, just see what happens to the build up. Still in the build up in here, whatever, I'll make it a little bit more nicer maybe.
Oh, this was an SMT.
Oh yeah, of course, that's like, of course. Again, also be careful. Again, if you maybe be like, oh, is that not an EDM, whatever? No, EDM is already done. We already traded the EDM, isn't it? That's
Yeah.
again, it's not let EDM, EDM, EDM. It's let EDM done. Especially if you tap in a 1 hour zone and the cycle is done. You're not looking for EDM trades anymore. That's done, right?
Yeah, it makes sense. And
It's
also,
one let, one EDM. And same thing now. We have one let. The only thing technically we'll be interested is in EDM.
all right.
So if it gives us an EDM in here, which it doesn't look, you all can see in price action, there's nothing we'll be interested in an EDM. So that's completely fine.
All right, makes sense.
All right, so it stays inside. Okay, and now it's the only time where we kind of induced the build up a little bit to the high side with this one. But that's all they got. And I think then soon even came news. And yeah, surprisingly, just fulfilling the perfect picture. And there we go. That was the news about to happen. I think there you go. Poof, choop. And now it was. Again, congrats for Sokpo for catching the Mona to the absolute perfection. 0 pip drawdown. Entry. TP hits so fast, you couldn't even make a screenshot.
Yeah,
Right, that's the way it has to be. Easy shit, is it? Is it that complicated? Seriously, everything is just only to the minute and only to the perfect absolute rule set. The only difficulty is, again, it's too complicated, that you're forcing yourself into these random reversal trades from time to time.
yeah, that might be it.
Right, but perfect. That's literally all it is. Use the entry helper for confluences and look at the timing. Like, what is a price? Only this trade, only London Open. Okay. Only this trade, only magic manipulation minutes 1 to the absolute minute. This entry, only magic manipulation minutes 2 to the absolute minute. Like, how can you make that shit up? Like, how? You can't. It's impossible. Right? So again, just use it. Just use it. Get in. Yes, there are continuation trades. Maybe you have to focus a little bit more on them. Don't force these random reversal trades all the time, right? Only reversal trade if it actually makes sense and you have all the confidence to do so. Okay, 1 hour point of interest, refine to the first M5, then when it was there to the M1, wait for the letter or best case, a relevant break of structure, boom, done. Away from medium inducement into the perfect direction. That's all it is. Okay?
Yeah.
Sense. Makes sense for everyone. Yes, sir. Absolutely yes.
So for the sell, where would y'all target?
Sorry?
Where would y'all target?
Oh yeah, definitely Asia low. And depending on how you see the medium inducement, you could aim lower, but for the intraday target also, of course, aim for here or this structure point, right? But if you see the medium inducement, you also could aim lower, of course, because again, at the end of the day was on 1 hour medium inducement zone. So zoom out a little bit if you want. Again, what's like a crazy liquidity point, or you can see it here. Obviously, there's quadrillion bottoms in here. Obviously, you want to go for this next, right? So intraday target is Asia. Low as always. If you aim for the more better target intraday for the liquidity target, that's definitely this price point in here.
Yep. Also previous daily low, right?
No, that wasn't the previous day low. I think it was Asia low. But again, liquidity point is here.
So if Asia creates a higher low, it's not a daily or daily low.
Technically, this would be, again, if you zoom a little bit more to the left, you could see it. Yeah, again, this one, again, it's the open of Asia anyways. Again, that's the liquidity structure point in here. Look at this perfect line. Obviously, you extend it out like this, right? And then obviously that's your target for the day and then out. Then you should not trade after that anymore. Again, what's the rule also? If London close comes and beats the extreme, it should be what? An inducement, okay? If it is in the range, it's London close, it should be mitigation. If it's the extreme, it should be an inducement. Check literally the rule set about London close, okay? So if you fast forward a little bit, because that technically just happened before our call, right? So that's obviously our target. Boom, done. You're done. That's like 10. If you're an intraday trader, that's definitely done, right? Liquidity taken, right? But then if you also look at the next timing window, which would be London close, you look for London close doing what? If you fast forward it a little bit, I think Sakpa targeted Asia low. All right, so pullback.
Building up.
And then London close happens here. It gets the extreme. What's the characteristic? Should induce the low, which it does. What a surprise.
Oh, dang.
Okay, so it's literally everything literally was rule based. The only thing was that the timing based on the sell was a little bit off, but they had to do it like this, obviously, because they wanted to align it with the news. And again, you can literally see of how to do it. Building up buy channels the whole day, just from going for the mitigations and then trooping everyone with the news. What a surprise. And you literally know all the reasons behind it. Isn't that crazy?
Yeah, it is.
Any questions? We have like a few more minutes. And then I have actually a call of the programmers, because we even doing more fancy shit for you guys, which will blow your socks off.
What's going to be in week 8?
Say that again?
What's going to be in week 8?
Week 8. First, you have to get your ass into week 6, my man.
Yeah, I still got to do the tasks.
There you go. Week 8 is a nice one, though. Week 8 will be a little grand finale, which absolutely is amazing. That's actually one of the... It's not the longest. Week 8 is like probably the shortest week we have, but we ended off with a bang, just to say it like that. So you can be excited to get there. No rush, though.
Yeah.
Lovely. Any questions? Come on, we have like a few more minutes. Now it's your chance. The legend Adam, how's it going? How's the account? I guess it's already at 10K. From 200 to 10K. Come on, make us proud.
Yeah, really
Week 9. Week 9 is nice. Wait, week 9. Week 9 is a very nice one. I thought you mean week 7. Week 7 is like checklist approach week. The wizard Rolf absolutely made some beautiful stuff for you guys. You will absolutely love that stuff. Week 9 is where you're all getting kicked out from the community. So, immediately. No questions asked. Just out of it. Exactly. Cam will hand select everyone who's watching week 9 and then it's immediate ban. What questions are in that? Was this clear though? Again, if you look at it and break literally step by step, it's a fucking moan a day, as literally every day. If you literally break it up into details, right? Again, it can be a little bit confusing if you look at reversal trades all the time. That's why we not only have to trade reversal trades. Keep that in mind.
Yeah. Yeah.
Lucas. Let's see what Lucas says. You have an only question. Regarding the medium inducement of the Asia, why don't we expect the medium inducement to downside for mitigation of the 1 hour demand? Okay, let me read the question again because I don't really understand it. We have a question. Medium inducement of the Asia. So you're talking about this in here, which is the medium inducement. Why don't we expect a medium inducement to the downside? I mean, technically, we expect a medium inducement to the downside, which again, the target picking is first, always. Intraday target is, again, Asia low. Again, it happens a lot of times when they just tap the Asia low and then enter there like this. And then you bite your odds if you're getting a break even. Happened to us a lot of times. You can ask Cam's tier cup of how many times it happens if you try to hold trades and then they just come back just to get us a break even. That's why the intraday target is always Asia low. And then, as you say, Lucas, you expect a medium inducement. If you zoom out, Eric, quick.
Oh, my bad.
Right. So what's the medium inducement? Again, you can technically aim for this little shitty point or the liquidity target, if you zoom even more out, which is, again, this crazy ass range in here. That's, again, the most efficient target for that day. Right? But again, intraday target, medium inducement target, and then liquidity target. That's the 3 targets you will always have. Okay?
Yeah, it makes sense.
Mr. Boykers, what was your question? Maybe you can speak up. I miss your lovely voice anyways.
Okay, yeah, I just typed all. How are you doing? Can you hear me?
I can hear you. Just fascinated by the beautiful vibrations right there.
Okay, thank you. I feel the same. No, it was regarding the hot seat mini cycle call. I really enjoyed that one, but I was trying to use it in the live market. But sometimes I struggle to mark up the mini cycle. So, like, in what market conditions do you use that concept that you have been showing right there?
So technically, very good question. For example, if you are seeing double tops in here, right, then it makes sense to go after that. You go into the M1 to see a mini cycle to trade into the bigger picture. Only then it makes sense. Because let's say you just randomly go into here.
Yeah.
Then you will get screwed because technically in the bigger picture, you had a medium inducement.
Yeah.
Right, but you're not in a point of interest yet. So price action is not ready yet. You're only looking for higher sides. You don't want to pick the peak. That's one of the worst mistakes you can do if you try to project, oh, that's the high, oh, that's the low, and it should reverse now. Again, that comes us to the ultimate question, like, oh, when does the inducement stop? I want to know the exact pip when it stops. That's not your task to do. Your task is to literally identify 10 out of 10 setups, which are Mona Lisa setups, which are rule confirmed, timing confirmed, burst, checklist confirmed, guideline confirmed, and then risk 0.5% on them. Boom. You will make so much fucking return on your investment, you have no idea. Yeah. But guess what you will not gonna do? If you're gonna try to pick the inducement perfectly 5 times in a row and get like 5 hits, you will get demotivated. You write me a negative message and whatever. And that's not what we want. It's so inefficient. I don't know why people try to do it all the time. Again, use the rule set and don't try to, again, reversal trade all the freaking time. Okay? Reversal trade when it makes sense to really clean, picture perfect cycle play and not in between. And then again, use the mini cycles to trade in the direction you want the bigger picture to go to. Again, same thing here. If we have the equal highs, baby cycle, build up, getting induced to a low side, coincidentally into the inducement point of interest, which also was the Asia midline point of interest, and only happens in Magic Manipulation Minutes 1. What are coincidences? How many coincidences can there be?
Yeah.
Right? But that makes sense because, again, equal highs. Perfect. You expect liquidity to be taken into the medium inducement and then trade away from the medium inducement once it's mitigated. That's the logical order you have to do it. Okay?
Yeah. Crystal clear.
Perfect. Lovely. What else do we have? You can use timing to exit a trade also, yes. But again, timings are more like the confluences to enter. But again, they technically, best case as you can see of whatever mindset and shit, the thing is when you close the perfect trade, you literally could enter the next trade. But again, you should not try that anyways. But just to answer your question, yes, timing is both for entry and exit. Looks good. Beautiful. Okay, I would say good session. And yeah, rest. Have an amazing rest of the day. And we catch you up tomorrow. Have a good one. Cheers. Good night.